SPAC listings are the most talked about, shorter way to global listing. Now, the special purpose acquisition company, which are popularly known as the blank checks, are essentially those shell corporations designed to take companies public without taking the IPO route. So let's talk about the model that it operates in. There is a listed SPAC already. It targets and acquires an operational company and then it comes up to a listed successor company. And this is what the Indian companies are really eyeing for. Now, remember, it's a big business in the US in the middle of the pandemic in the year 2020. Over $80 billion have been raised through close to around 250 odd SPAC listings. And that has now hit the Indian shores as well. So let's talk about the Indian companies as they gear up through a structure of mostly de-SPACing, which means that reverse merger into a listed SPAC already, for which the companies need to externalize or create an offshore entity. Now, here the biggest issue that the Indian companies are facing, besides many other regulatory concerns, is the transfer of shares to externalize, and that under the Indian law is taxable. But there are several benefits. It's the access to capital, better valuations, global visibility, which is clearly a crowd puller in a short period of time for the Indian companies. Now, as compared to the other forms of listing, let's do that analysis as well. And SPAC clearly scores high in quick turnaround and is attracting companies which want to use the present window of equity bull run and the gush of liquidity that is provided worldwide and especially in the US markets. So almost all the Indian tech unicorns are said to be evaluating this particular type of listing, especially with the global direct listing norms delayed by the government. Green energy is in vogue, and Renew Power has already announced its first listing from India, SPAC listing, in the current times. So while everything sounds good on SPAC listing front, key challenges remain as these have a time-bound usage of money of 18 to 24 months. The quality of sponsor as well as the usage of funds may have a perception as well as governance concern. And since so much hot money has really flown in through the SPAC listings, there is also a lurking concern in the market of a regulatory clampdown in the US. So to the big question that we ask, will India ride the gravy train?